Hi everyone, I'm attorney Aiden Durham with 180 Law Co. in Denver, Colorado, and you're watching All Up in Your Business. On this episode of All Up in Your Business, I'm going to tell you guys all about holding companies, what they are, what they mean, how you form one, and why you may or may not want to. But first, don't forget to like, subscribe, and share, and check the description for links to additional information and resources and free downloads and guides and all kinds of fun stuff too. And before we get into it, I have a big confession to make and something I really need to get off of my heart to you guys. This isn't going to be business related, so if you want to just get to the meat of the video, go ahead and skip a couple of minutes forward. But I want to give you guys heads up. What I'm about to say, this might be the most dramatic episode of All Up in Your Business yet. If you've been watching my channel for a relatively long time, or if you follow me on social media, you've probably seen a lot about my best buddy, my dog, Rocky. Well, it's time for me to admit something to you all. Turns out, poor Rocky and I, we've been living a lie this whole time. Since I adopted Rocky in 2009, I've been telling everybody that he is a Newfie Border Collie mix. That's what they told me when I adopted him from the shelter. He was a Newfie mix. He looks a lot like a Newfie and Border Collie mix, so that's what we've gone off of. Well, I recently did a DNA breed and health kit for Rocky through embarkvet.com. Turns out, Rocky is neither a Newfie nor a Border Collie. I know. I found out that he's actually about a quarter Labrador Retriever and then a mix, a little bit each of Australian Cattle Dog, Australian Shepherd, Chow Chow, Pit Bull, all these other dogs, none of them including Newfie or Border Collie. So this is a big change, you guys. Even though it has been difficult and heartbreaking to learn that Rocky and I have been living a lie this whole time, it's still been a very interesting and cool experience doing this DNA and breed kit and getting to learn all of the other information and insights that they tell you about your dog. Not only does EmbarkVet's DNA and health kit tell you the breed or breed mixes of your dog, they also test over 200,000 genetic markers and test for 175 different medical conditions that your dog might have. Luckily, aside from the drama around what he actually is, I learned that Rocky doesn't have any major genetic or health conditions, thankfully, and for the most part, he's a good, healthy dog, whatever the heck kind of dog he is. This is not a sponsored video or a paid promotion. I'm doing this completely on my own accord because I had such a fun time. Really, it is a little disheartening, honestly, that Rocky's not a Newfie. He looks exactly like a Newfie, but it was really cool getting to see the details about his breeds, and EmbarkVet even lets you see like family members if other dogs are related to your dog and they've been tested by EmbarkVet. You can see their actual family members. So I know Rocky has the equivalent of first cousins, a lot of them all over the place, and they're all labs. But I do have an affiliate code in the description that will give you $50 off a DNA breed and health kit through embarkvet.com. If you want some more info and insights into your dog, or if you just want to learn more about your dog's health or find out what kind of breed or breeds your dog is, I really recommend EmbarkVet because it really gives you a ton of information, super easy to use. So again, check the description to save $50 on a DNA breed and health kit with embarkvet.com. Okay. Let's move to holding companies. So what is a holding company? A holding company is just an entity that owns other entities. Holding companies are sometimes referred to as umbrella companies or parent companies, and they will own the subsidiary or child companies. So the holding or parent company owns the subsidiary or child companies. Typically, the holding company or the parent company doesn't actually have any of its own business operations, and it doesn't really conduct any independent business on its own. The subsidiary companies are the ones that will usually actually be in some business operation. They're the ones selling the products or services. They're the ones hiring employees, paying vendors. So the subsidiary or child companies are the ones that are actually engaging in a business operation, whereas the holding company quite literally just holds those other subsidiaries. And sometimes, depending on the nature of the business, the holding company might own some major assets or real estate that then the subsidiaries would rent or lease or otherwise use from the holding company. So why would we create a holding company? What's the point? Why would we even do this in the first place? For the most part, the primary purpose of having a holding company structure is for additional liability or asset protection. Let's back it up a little bit. So we know generally that the LLCs and corporations, the main reason we use those is for liability protection. If an LLC is involved in a lawsuit or has some other kind of liability, it's just the assets of the LLC that are going to be subject to that liability or subject to any risk from that liability. Only the assets of the LLC, not the assets of the individual members or owners of the LLC, just that LLC's assets. So let's say you've got multiple business operations. Maybe you do a lot of different businesses, or you have different lines of business going on. Or if you are a real estate investor and you have multiple properties that you're holding. Best practice generally is to have each operation or each piece of property owned by its own separate LLC, because we want to separate the liability of each operation. If business A gets sued or has some liability, we don't want business B to be at risk, or the assets of business B to be at risk of that liability. Or if we're talking about real estate, if there's an issue or liability over property A, we don't want property B to be subject to that. We want to keep things separate. So in a lot of instances, if we have multiple operations going, we want to have multiple entities so each one is separate and each has its own liability. And so when we're talking a holding company or a parent subsidiary structure, if the holding company or the parent company owns major assets, big pieces of equipment, or commercial real estate buildings, or even an extensive intellectual property portfolio. If those assets belong to the holding company, then liabilities to the subsidiary companies, the idea is that it won't affect those assets because that liability is separate from the holding company. So the assets of the holding company are going to be protected from the liabilities of the subsidiary or child companies. So really, in most situations, that's the primary advantage of using a holding company structure, is to separate liability between your different business operations and really to add some level of asset protection for important or highly valuable assets of that might belong to all of the companies, or that might be used by all of the subsidiaries. Really, the idea is just to provide an extra level of separation and separateness to protect certain assets and to protect the different functions and assets of the individual businesses too. Holding companies also allow you to have a little bit more control over like the organization and branding of the subsidiary companies. So if you are, let's say, operating multiple businesses, each subsidiary, each child business has its own, can be structured essentially in its own way as far as like management goes and organization and everything. And then branding, marketing, everything can be under that particular business. And if we compare this to doing something like having one LLC and using different DBAs or trade names, that's also a good way of having kind of separate branding for different business operations. But when we're talking about DBAs or trade names, those don't create separate entities like a parent-child or holding subsidiary structure would. Each DBA is still a part of the one entity. So that doesn't give you liability protection. But we have separate entities, then we've separated the liability and we have separate businesses that can really operate completely independently of each other. But I think one of the biggest benefits of having a holding company structure is with taxes. In most cases, it really helps to streamline your taxes when you're dealing with multiple business entities. Rather than filing multiple tax returns, it may be possible to just do one consolidated tax return for all of them. That's not always the case, but often that can work out and really does help to streamline the whole process so you're not dealing with a ton of different tax filings every year. When we're talking about LLCs in this context, and I'm talking primarily about LLCs in holding company structures, but you can have a parent subsidiary structure where they're not all LLCs. They can be corporations, they can be partnerships, or other types of entities. I'm focusing mostly on LLCs because that's what I deal with for the most part. But what I'm talking about generally extends to those different types of entities. But taxes will be a little different depending on what kinds of entities we're dealing with. But so anyway, when we're talking about LLCs, each of the subsidiaries would be a single member LLC because the parent company is the member of each of the subsidiaries. LLCs are pass-through entities, which means that the taxes, the profits and losses, pass through to the owner or the members of the LLC. The LLC itself doesn't pay taxes on the profits. Rather, it passes through to the individual members themselves. So then let's say we have subsidiary A, B, and C. Each of their incomes will pass through up to the holding company. Then from the holding company, they would pass through to the actual members, the owners of the holding company. Speaking of taxes, let's talk really quick about S-corps and holding company structures. Entities that are taxed as an S-corporation can't be owned by other entities, whereas traditional, like an LLC or a C corporation, an LLC can be owned by another LLC or by a corporation, and vice versa. A corporation can have an LLC that's a shareholder, but S corporations in particular can't be owned by other entities. So you can't have an LLC that is the member of an S corp. So in the context of holding companies, these subsidiaries can't be taxed as S corporations because they are owned by the parent company. But the parent company, assuming it's owned by individuals, can be taxed as an S corp. So even though the subsidiaries are not taxed as S corporations, the income still flows, passes through to the parent company, which is taxed as an S corporation. So in the end, ultimately, all of the income is pretty much going to be taxed like you're an S corporation for all of the entities. So those are some of the primary advantages when we're talking about holding companies and parent subsidiary structures or umbrella companies. But these kinds of structures aren't without their faults. There are definitely some disadvantages to having a holding company or a parent subsidiary structure in your businesses. The biggest one really is the added just organizational and administrative hassle. You're not just filing or forming one company, you're forming at least two, maybe 3, 4, 5, 10, a million companies. That means filing fees for each one that you form, annual filings. Each state, I believe, has some kind of annual reporting requirement. So each entity is going to be subject to those reporting requirements, any kind of fees that are subject, it's going to be each one. You need separate accounting records, separate bank accounts. There's just a lot more that goes into it when you're dealing with multiple companies, because you're dealing with multiple companies. And the fact that they're all owned by the one doesn't negate that. You're still dealing with multiple companies. So I think that's the primary drawback, and it can be a pretty big hassle in a lot of situations. And since the whole idea here is separateness for separate liability, that means keeping everything separate. So separate records, separate bank accounts, separate accounting records, separate everything. So what you do for this LLC, you got to do for this one, and this one, and this one, and this one, including the parent one too. So if we've decided that a holding company structure is right for us, how do we go about setting that up and forming it? Well, it's going to be different for each state, but for the most part, the process is relatively easy. So you would start by forming the parent company or the holding company. You'd start by forming that company at the top. If we're talking LLCs, I usually recommend making the parent company a member-managed LLC, and you, or the individual owners, are the members. So you need to file articles of organization in the state where you want the parent company to be formed. You'll have to name a registered agent for the LLC. You'll want to apply for an EIN, open up a business bank account. Take all those steps that you would when you're just setting up an LLC. You'll do that for the parent company. Then you'll form the subsidiary companies. Now, the difference here, instead of the individual, instead of you being the owner of the subsidiary company, it's that holding company, which is the owner or the member of the subsidiary company. Again, it's gonna look different for each state. Just because, the forms, the articles of organization aren't the same in each state. The terminology is a little different. The information that's required is a little different. But if we're talking in Colorado, so Colorado's articles of organization, there's a section where it asks for the person or persons forming the LLC. So for the parent company, it would be you, the individual, as the person forming the LLC. And then for the subsidiaries, it would be the holding company who is the person forming the LLC. Don't let the word person throw you off. In, I believe, every state, the word person also will include entities and not actual natural humans, but it includes other entities. So even if it says person, it's still probably going to include the holding company, which can be the person forming the LLC. So that's how you state on the, articles of organization that it's a parent, child, or holding company, subsidiary company structure. I typically make the subsidiary companies manager managed LLCs. So whereas the holding company was member managed, the subsidiaries would be manager managed. And then the member, which is the holding company, can elect you or another individual to be the manager, who is the one authorized to act on behalf of the LLC and to really be in control of the day-to-day operations and generally manage the business. And so again, in a lot of situations, the manager would be you. So the holding company, which is the member, elects you as the manager of the subsidiary companies. Again, the whole point here is separateness and separate liability. So yes, everything needs to be separate. I get this question a lot. Yes, if we're dealing with subsidiary companies or parent-child or holding companies, each subsidiary needs to be separate from the other one. So yes, you need to get its own bank account. Each LLC, each subsidiary needs its own bank account, and in most situations also needs its own EIN, needs its own accounting records. All of that needs to be duplicated for each one because they're each separate and distinct entities from each other. Now, having said that though, it doesn't especially matter if there's some overlap between the LLCs or if there's a lot of similarities between the subsidiaries. They can each be, they don't need their own separate addresses. You can use the same address for each entity. You don't need to have different registered agents for each one. If you have work with one corporate registered agent, the same registered agent can be for each subsidiary. That is kind of dependent on the states where each subsidiary is formed and all that. But the point is, it can be the same registered agent. You can have the same bank. You can use the same bank, not the same bank account, but you can have all the accounts with one bank. That's okay. And then if there will be assets that might be used by all of the subsidiaries or a few of the subsidiaries, then those assets, we would typically want them to be owned by the holding company. And then the holding company can lease or rent the equipment or materials or whatever it is to the subsidiary companies. And again, the point there is liability and asset protection. So let's say you've got a big piece of equipment. If all of the subsidiaries use it, but the holding company owns it, then if one of the subsidiaries gets sued, that piece of equipment will be protected from that liability because it's owned by the holding company. And then when it comes to paying yourself as the owner or member of a holding company, it's not that different than it is in any other situation. But remember, you as the individual are not the owner of the subsidiaries. The holding company is the owner. So you should not be taking distributions directly from the subsidiary companies. Each subsidiary, each child company would make distributions to the parent company, and then you take distributions from the parent company just the same way you would from any other LLC, single member LLC. It's the same situation, but the idea is that you're not making distributions. You're not getting distributions from the subsidiaries because you're not a member of the subsidiaries. So a few common questions that typically come up when we're talking about holding companies or umbrella companies or this kind of a business structure. Number one has to do with the EIN. Does each child company or subsidiary need its own EIN? Does each one need its own EIN? Not always. For single member LLCs, the IRS doesn't require that a single member LLC have an EIN. But most banks require an EIN if you want to open a business bank account. And if you're trying to open an account for multiple entities, then most banks will require a separate EIN for each account. So in some cases, it may not be legally necessary to have an EIN for each one, but in practice, it kind of is required. And again, the idea here is separateness. So every little thing we can do to separate the subsidiaries from themselves, everything we can do to make sure those are distinct and separate from each other is better. So getting an EIN, I mean, it's free. It doesn't cost anything. You just file another application. Even if it's not required, it's still good practice anyway, because we're giving something that's distinct for each entity. And I'm talking single member LLCs, but a lot of other entity structures like corporations do actually need EINs. So if we're dealing with corporate structure among this parent company or any of the subsidiaries, then yes, you would need a separate EIN for each one. Another really common question I get when we're talking about this has to do with the states and where which states the entities are going to be formed in. The subsidiary companies don't all need to be formed in the same state, nor do they need to be formed in the same state as the parent company. You could have one parent company and 49 subsidiary companies, and each one could be formed under a different state. There's nothing really wrong with that. It may not really make sense, but you can do that. So the parent company can be formed under the laws of one state, and the subsidiaries can be formed under different states. So that is doable and possible, but whether it's a good idea and whether it is actually beneficial to do that is going to be completely fact dependent and circumstantial. So that part I can't really tell you guys about whether it's good to do it this way or that way, because it's always going to be different depending on your circumstances. But the point is, yes, you can have different entities formed in different states, even if they're all under the same parent company. And finally, there's no set limit on how many subsidiary companies you can have. As far as I know, no states have like limits on how many LLCs you can form, how many LLCs one person can have, anything like that. So in theory, you could have one parent company with 1 million subsidiary companies. Again, that would probably be a major administrative and tax headache, but it's possible and you could do it. When we're talking about holding companies, again, every situation's different, but when it's kind of a balancing factor of the advantages versus the disadvantages. If I'm dealing with one individual who maybe has 2 or 3 smaller business operations, maybe they sell things online, they've got an Etsy store and Amazon account that they sell on. But if all of the operations are kind of closely related, I don't typically see that there's a big benefit in having them separate or having them separate with a holding company. Sometimes it's good enough just to have 2 separate LLCs. If we've got 2 separate business entity or business operations, you can't just have 2 separate LLCs without the parent company. You don't need that parent company. You can be the individual owner of both of them. And sometimes that's easier than dealing with adding the 3rd parent company, because now we're just throwing one more entity into the mix. Or if they're all relatively small business operations, maybe you're not generating a huge amount of income and you're not planning to, then you can just have them all in one entity and use DBAs or trade names to kind of differentiate them branding or marketing wise. Usually, when I strongly recommend holding company structures, it's most often with real estate investors where they've got multiple properties that they're investing in, because those are things that we certainly want to separate out. We don't want to share liability between one property and another. And then in those circumstances, the holding company often makes sense too. So to summarize, this structure of holding companies and subsidiaries or umbrella companies or parent companies, the terms all pretty much mean the same thing. But so this idea, it can be beneficial in a lot of situations, but it's certainly not without its flaws. And even though there may be a little bit of benefit, it can cause a lot of unnecessary headache and hassle. So how you should structure your companies and whether or not you should even do it in the first place is completely, again, dependent on your circumstances and your individual facts. So as with everything in the law, it's always best to consult with an attorney to figure out if this is the right move for you and the best way to structure your business is. And I typically recommend starting with an attorney who's licensed in your state where you live or the state where you pay taxes, the state that you consider to be domiciled in. Start by talking to an attorney in that state. And then that attorney might be able to help you figure out if we're dealing with other states or if you should talk to a lawyer in a different state. Because sometimes if we are dealing with real estate, sometimes it makes more sense to form an entity in the state where the property is located versus where you're located. But sometimes it doesn't make that big of a difference. So again, ultimately, talk to a lawyer, start by talking to one in your state and go from there. That's all for this episode, folks. Drop a comment below. Let me know what you think. Again, don't forget to check the description for links to additional information and resources, or to save $50 off of your EmbarkVet.com DNA, breed, and health kit if you want to learn more about your dog too. Thank you all so much for watching. I'm Aiden Durham, and I'll see you next time.